Like, what is stopping you from reaching, let's say, 35 to 100?
Or in any business, when you are not clear on what business you're in, that's when you make mistakes.
How are the financial dynamics of starting a new restaurant? Hi everyone, today we are with Vidli Restaurants, the promoter himself, whose name is Vikram Kamat. The company started in 2005 and in 2024 the company is still young. The market cap of the company is somewhere around 70-80 crores, very small company. So, we are trying to find even small companies, large companies with great stories to tell. So, Vidli Restaurants is one of them. Today we have with us Vikram Kamat. Hi.
Thank you.
So firstly, look, you started in 2007 and you in 2015 you did an SME IPO, and from there, so I just want you to explain the journey from 2007 to 2015 and from 2015 after listing, what changed, and from there, how was the journey to today?
Right. So when we started, we basically had one goal in mind, which was to be the leaders in South Indian F&B. We have done quite well on that path, and once we started, we were getting our thing together. We started primarily on the highways because real estate was very expensive at that time. When we started in 2007, the meltdown hadn't yet started, which took place in about 2009, 2010 for India specifically. So it was a great journey. We started, Kamats has done very well, entire Maharashtra and Gujarat. Of course, then we did a listing. Our listing was not so much about raising money, but it was more like a technical listing so that we come on the platform.
Okay.
After that, of course, we've come on the main board as well. We consolidated our businesses. We grew in the 3 and 4 star hotel space also with our brand Wits, and we made that also into a subsidiary of the company and made the structure very clear. So that's been our journey so far. And in between, we've had many ups and downs with demonetization, GST, most recently COVID. So it's been interesting.
Great. Look, if I look into companies like petrochemicals or textiles, they have a value chain to explain. But hotels, restaurants, it's a very simple value chain. Everyone who is watching this have experienced hotels and restaurant some point in their life. So I want you to explain, like, from my understanding, you have two businesses. One is a restaurant business, one is a hotel business. Now, in terms of very technical holding structure, can you tell me? Because when I was going through your balance sheet, your presentation, there is a holding company, then there is the Vidli Restaurant, then there are subsidiaries. Can you quickly explain this?
It's a very simple linear structure. There's the holding company, there's the listed restaurant company, and the subsidiary of that is the hotel operating company. I just want to correct you there because we are not a hotel company. We're a hotel operating company. We believe in asset light operations we are very clear that we are not a hotel owning company. We're a hotel operating company, and same goes with our restaurants. We are in the business of operating restaurants, especially South Indian restaurants under the brand Kamats. So, I mean, I just want to clarify that because there are other giants who have a different philosophy in the hotel business. Hotels have always traditionally been seen as large elephants who are very big, strong, have big balance sheets. We are a nimble company. We are an agile company, as I said, because we are in the operating business rather than in the asset business.
Okay. That's a good segue. Restaurant business, hotel business, hotel operating business.
Hotel operating business. Yes.
Why do you say that you're not into hotel business, but you're into hotel operating business?
I think if you see a tradition in the hotel business, or in any business, when you are not clear on what business you're in, that's when you make mistakes, or you end up not realizing, or you try to do different things, you try to do the wrong things for the business. So in our case, we are very clear that we are on the operation side of it. We make our money from leasing of the assets, from managing the hotels, O&M, that is operating and managing of the asset, and we do everything focused on that. We are not into acquiring hotels or playing that balance sheet game. So in that sense, we have different problems from those traditional companies. We are a new age company, so we have our own challenges when it comes to. So we have more things of how to lease a hotel well. They might be thinking of how to value an asset or how to value a hotel. We think of what is the right lease that we should be paying for an asset. We try and value what we are getting along with the lease and what would be the minimum amount of capex required. So these are things which we apply our time and mind on.
Okay. So traditional businesses, like traditional hotel businesses, if I talk about the large names like Lemon Tree Hotels or Taj or the major players, they are into buying the property, okay, then putting their own systems, processes, people in place. But you are saying that you are like the hotel is already built.
Yes.
It's someone else's, but you're taking on lease. It can be 10-year lease, 30-year lease, or they are asking you, Mr. Vikram, come and manage it for us.
Correct.
Okay, put your people, processes, systems there.
Yes.
Maybe do a small capex if needed.
Yes.
Like a parking or whatever it may be. It's the name board. Whatever. So that is the difference, right, with the traditional hotel and your company.
We are not into heavy capex when it comes to making under the brand Wits. We are not into very heavy capex in terms of building out, doing civil work. Majorly, we don't take any hotels which require a lot of civil work. Inadvertently, all hotels require some amount of money to be spent. We have a matrix or a formula that we follow, and we don't spend beyond that. And that's also on a per key basis. So no owner is going to spend on your signage. No owner is going to spend to rectify the board which is on top of his hotel to add your name. Or I'll give you an example of one of the hotels that we had, which we took over in Daman. The owner had made the hotel a very nice hotel, but he had not made a conference hall. And he had maxed out as this. He had made a lawn, and he had made, but we knew for doing weddings, even during non-seasonal times or during nowadays rain, unfortunately, there's no more, it can come anytime. So people, or somebody wants an AC hall. So we constructed a prefabricated AC hall, which wasn't much. It only was about 10-12 lakhs for building it out. So we do limited expenses and we calculate that and do it. We don't do long-term civil or ad floors or things like that.
Understood. Now let's structure the conversation we've had. Restaurant, hotel business, hotel operating business.
I would say restaurant, hotel business.
Restaurant, hotel business. In the hotel business, there are basically three types that usually different companies go for. One is owned.
Yes.
One is managed.
Correct.
Then leased.
Yes.
Can you quickly, in simple terms, explain each of these three terms?
See, in ownership, what happens is the entire hotel balance sheet is yours. You have to build out the entire thing and you get the entire P&L.
See, that's complex. Balance sheet means the structure.
Balance sheet means you have to raise the finance. You raise the money, you raise the capital, whether it be equity, whether it be debt, whatever it is, and you execute the project, build it out, and for the next how many ever years that you own the asset, you get the entire profit or loss of the asset. Tomorrow, if God forbid, some issue happens, you can sell the asset, you can dilute at an asset level. So these are the pros and cons. Second is where you said management contract. In management contract, somebody owns the hotel, but he's just kept you like a manager and paying you a fee for managing the hotel. So the entire profit or loss is the owner's. He has funded the hotel. He is bringing you in as a purely like a manager. Something like how you would manage somebody's portfolio. You take a fee, a percentage of the as a fee, and that's it. The entire profit or loss or asset will always belong to the owner. And in the third case, in a lease, it is like the owner has given it to you on a fixed rental. If you do well, very good. If you don't do well, very good. The disadvantage in this is only that tomorrow, if you can't operate the hotel well, you have to just give it back to the owner. You can't dilute it. The owner has not mortgaged it to you. You can't raise any finance on this asset. Neither can you dilute or sell this asset. You are there to operate the hotel. If you operate it well and make good money, it's for you to keep. So the entire profit and loss is with you.
Okay. Now, two questions branching out of this. Managed first. What percentage of revenues they make? Is it based on revenues or is it based on profit that you get a percentage?
No, it's based on revenue. In our case, it's based on revenues. In the industry, they do a combination of top line and they do a combination of bottom line. We don't do that. We keep it very simple and go with a pure royalty structure on sales.
Royalty structure.
Yes.
And if I may ask, what is the percentage varying in the industry or for you specifically?
Typically, it's in the range of 5%.
5%.
Yeah. What happens is we are operating hotels 35 rooms and above. So, which is again a very unique aspect. No other operators normally take such low. Everybody wants 100-room hotel, 70-room hotel. We being F&B, from the F&B background, what happens is we are able to turn around, or our cost structure is also such that we are able to turn around even low inventory room hotels, 40-room hotel, 50-room hotel, which normally nobody wants to take. And what happens in tier 2, tier 3 cities, you cannot build out large 100-room hotels because there's not that much business throughout the year.
That's true.
There is good business. These hotels are basically surviving on weddings,
Yeah.
F&B,
Yeah.
good restaurant, good bar, family restaurants. So that is the advantage that we are able to turn around, which others are not able to capture. So that is the void and the USP and the leadership position that we have.
Okay. Now, in the leased
Yeah.
format, let's say you said the prefabricated wedding hall that you're putting 10, 15 lakhs odd in. When the lease is over, let's say 10-year lease, 10-year lease is
Yeah.
over, this prefabricated portion, the 15 lakhs, becomes the property of the owner, right? Not yours.
No, in this case, it's our asset. We will fold it up and take it
Okay.
somewhere else. So we try and see certain things you can't remove, but this particular hall, as an example, you can. But yes, I mean you put some fittings in the replace some bathroom fittings. You're not going to take out the bathroom fittings and go. But yeah, we try and minimize things that don't.
Makes sense.
Yeah, I mean we are also
The
prudent people.
average lease period is how many years?
Normally 7 years, 9 years.
Like 7 years.
Yes, and renewable.
Mhm.
In India, the trend of doing 30-year contracts, I mean, yes, government tenders, they do long contracts like 30 years. Hopefully, with the advent of REITs and as more REITs are doing many hotels, they will want somebody to take for 20 years, 25 years, 30 years. So, we'll see that in India, since most of the hotels and traditionally most of these assets are owned by individuals, they always want to keep their options open. So, they want to do the shortest possible tenure so that I can keep revising the lease rent as the market goes up. But professional operators, they want a long-term lease so that they can refinance. If they have got a longer lease, then they get better capital, they get better access to capital, they can plan much better. So hopefully with more professional capital coming in with REITs and all, we'll see a change in that.
For now, let's strike off owned because you're
Yeah.
not into that.
Yeah.
Between leased and managed, which is your preference?
I have no preference. It totally depends on the market. Many times you get in a particular market, somebody says, I want you to manage my hotel. In some cases, they come up with lease. So I have no preference. We go totally by what we get and what the market needs.
Got it. Now, so most of your hotels are in which model then, if I may ask?
At the present moment, 90% of the hotels are in the management contract model.
Okay.
And we have started doing lease. In lease, the main thing that has held us back, obviously, is access to capital in terms of, for whenever you lease a hotel, you need to give a straight up deposit because the hotel is already built out. So he's expecting at least a 75 lakh to 1 crore deposit upfront.
Okay.
So that little bit becomes the bottleneck for expanding the model, because let's say you want to lease 5 hotels in a year. That means you need 5 crore with you, liquid, which obviously only happens at some kind of liquidity event. Otherwise, from the profit, let's say you're earning from each hotel 2 lakh, 3 lakh, 5 lakh profit, till you accumulate a crore, it will be at least 24 months, 25 months. So it's a little inorganic in that sense.
Understood. Look, from your balance sheet, it's pretty solid. You have debt of around 20 crore, but besides that, even so, you have cash too.
Yeah.
Now, and it's pretty, the balance sheet is pretty clean. Now, the current 20, how many hotels you have? You said 20 hotels that you have.
Out of which, 21 now, 18 are management contracts and 3 are leased.
3 at least. Now, where do you plan to take this in the next 1 year? Like number of hotels?
It's a little difficult for me because being listed, we have to be cautious of what we say. But definitely the focus, there are 2 focuses because we have 2 separate teams. The restaurant team focuses completely on restaurants, on Kamats. We've been doing amazingly well with Kamats Legacy and Kamats. And the hotel team takes care of the 3 and 4 star brand, that is Wits. So on the Wits front, obviously we are adding more management contracts. We are adding more leased hotels. Leased obviously is dependent on the capital available that we keep accumulating. And in the restaurant team, where we already have raised a warrant and raised capital, we're using that money to also grow Kamats Legacy, which already we have 2 in Bombay. That model has been doing exceedingly well. We'll be adding a 3rd very shortly in Malad.
Okay. So you're not giving any like 1 year, 5 years from now. What is your vision? Meaning, how many hotels do you plan
See,
to?
in Wits itself, I believe in the coming next, I mean, with all disclaimer I'm giving, but in the coming 3 to 5 years, I believe with the right amount of capital that we get, we can definitely scale this up to, we can go in the next 3 to 5 years to about 100 crore with these leased hotels, because on average, each leased hotel does between 4 to 5 crore.
Okay.
On average, I mean, some will do more and some will do a little less. Like I said, if it's a 35-40 room hotel that you've got on lease, it might do a little less, but it's a good location. Sometimes we get 50-60 room hotels, and then each individual markets have their ARR. So I'm just making it a little easy to understand. On average, we'll do about 4 to 5 crore in this segment.
In the least
Lease
space.
So if one is able to, in the next 4 years, 4 to 5 years, do 20 hotels on lease, other than what management contracts are already coming, where we are getting about 4 or 5 crore in royalty at the present moment. In such a scenario, what happens? 20 over 5 years means every year you have to add about 3 to 4 leases on average. 4 leases आप add कर रहे हो into 5 crore. So that is 20 crore every year you can grow. So in about 4 to 5 years, comfortably, if you are able to accelerate that, obviously even better. And similar goes with the restaurant business. Already we have 35 restaurants. Most of them are franchised, so we only get a royalty income which are on the highway. Now we are pushing on company operated outlets, whereby the entire benefit of the sale revenue and profit comes to the company rather than just doing franchising.
Okay. So let's say in 5 years you plan to do 100 crore new in leased with disclaimer, of course.
Yeah, with the hotel. That is our. We are confident that we can reach there. Obviously, subject to us completing all the capital requirements and all. And on the restaurant front also, we are planning to grow aggressively there, which we have already started, and we've taken Bombay as a starting point, because Bombay, Delhi, Ahmedabad, Calcutta, Pune, these are large cities which have ability to take multiple restaurants like Kamats Legacy. So each of these cities can do about 5. And there also we are planning to do a company operated model. We've got a lot of inquiries for people who want to partner with us, like a franchise, but we are not doing a franchise where you can operate the restaurant. We will operate it completely. If required, we will also make some part investment in the restaurant, so that we can consolidate it in our book.
Okay, now you want to switch to restaurant business, talk about that more?
It's your show,
okay,
as you say.
So hotel business, you said, let's say 5 years, if all goes well, add 20 more leased types, so it will take you around 36 or 40 hotels in between that 36 and 40 range in the next 5 years. Got it. I want to come to the challenges that you face in the hotel industry, but it will be common to restaurants as well. So now let's switch to the second second segment, which is the restaurant business. How many restaurants do you currently have?
We presently have 35 restaurants. As I said, most of them are franchised. 2 of them are company owned operated.
Okay. Now, do you intend to grow that portfolio to maybe 50 or 60?
That's why I always kept the team separate. We have separate business heads for the 2 businesses, because the businesses are separate. They require separate focus. They require separate attention, and they have different growth plans. So that's how that business also has got tremendous amount of potential. I'm in a very lucky position where I've got 2 mind-blowing businesses which have got growth potential, and each needs their own due and justice. Each needs their own effort. Each needs their own capital. In the restaurant business also, it's a slightly different model, because it's a high volume, high turnover model.
Yeah.
You are selling items of everyday consumption. In the hotel, you are selling a room which might be 2,500, 3,000. So the transaction size per transaction is higher. In F&B, in the restaurant business, the transaction size is 700 rupees type. In Kamats Legacy, in the regular Kamats, it's even lower. It would be around 120 to 150 rupees, whereas here the transaction size is higher. It's about 550 to 700 rupees, depending on the location within the city. So our Nariman Point obviously has a more higher APC, and some other locations have a little lower. So that also has got a huge potential to grow, which we are encashing on also. And we believe that we can be we are already one of the largest professionalized South Indian chains. There's no other chain like Kamats, which is doing South Indian in a very professional manner, and which is having more than 35 restaurants. That itself, we can go at least to 200 comfortably in the coming years. So that is our target, to first from the existing 35 to reach the 70, cross the 50 mark. This is balance 15 we'd like to do in company operated format. And then from there, everything ahead will also come in that format only.
You're saying the scale up of 35 to 100. How are the financial dynamics of starting a new restaurant?
Specifically, you're asking specifically for Kamats, I assume.
Because in the hotels, you said that you have to give 1 crore upfront. So if I'm starting 5 new hotels, 5 crore I have to give upfront. So that has slightly held us back in terms of lease.
Correct.
So in terms of restaurants, if you're starting a new restaurant, what is the initial cost that goes into it? Like, what is stopping you from reaching, let's say, 35 to 100 in the next 2 months? Or you will have a reason, right? Because that cost is high, upfront cost is high. I have to put people in place. So I want you to explain that element.
So what has been holding us back in the restaurant business was, first is that it took us a while to. Kamats has been there a long time. Kamats as a brand has been there for over 80 years. It wasn't very visible. It was completely out of the market at one point in time. I revived the brand, re-established it, re-engineered it to what is today's requirement, and launched it, and it did exceedingly well. As I entered the cities, I saw that Kamats, while a very successful brand, people associated with the mid-price market, which is not always feasible for large cities, because today the rentals in the cities also have become kind of standardized. Even we assume that, only Bombay and Delhi will have high rentals. No, other places also have got significant rentals, and their purchasing power also is on a similar line. So I realized there's a big need for proper South Indian, authentic South Indian in the, no, I wouldn't say fine them, but in the premium space.
Okay.
Where people are getting the quality South Indian items, quality South Indian fare with the way that it is actually made in South. And that is what we perfected with Kamat's legacy, and it took some time to model, because we have been in India exposed only to a limited amount of South Indian, which is in the normal. If they South Indian, only idli dosa vada. Okay, that's what you think of. Okay, so when you try and expand it a little bit, you have to understand how much you can expand it. Okay, there are many things to do in South Indian. One pet peeve I've had is we have had to do paneer chettinad. Okay, now paneer, we also know, is not traditional to South. Nobody eats paneer in South. There is no paneer chettinad. Okay, there will be chettinad, there's chettinad mushroom and all, but not paneer chettinad. But you have to do it because the market wants that, because the people are not exposed to South Indian. They are used to eating paneer. So they want paneer in that format. So these were some of the things that we had to take time to perfect, sometimes overcome our own mind blocks and do. So that was the thing, but we've perfected now, and that's how the scale up is happening.
Okay. If you're opening new restaurants, are you going to do it like a JV model, or like are you going to own the property then build on it?
No, we're not looking at owning the property. Again, as I said, it's a JV model, especially for the cities outside Bombay. Bombay, we are doing our own outlets completely. We're not doing any JV because, like I said, we are perfecting the model. Then it's going to be completely cookie cutter, because we know, and we already done. See, we already have run businesses at scale. Before COVID, we were nearly 70 odd restaurants strong on the highways. Okay, we scaled back during COVID because, I don't need to tell you how tough COVID was. From there, what we have done is we are perfecting this model for ourselves. So we have our own central kitchen, we have our own Kamats Academy. We are the first and only having our own academy called Khas Kamat Hospitality Academy of Skill, which is India's first and only earn and learn program for hospitality. They are getting 6,000 rupees as a stipend and completing the 12th standard. So they are not being a burden on their parents. They are doing exceedingly well. They are earning and they are making a livelihood. At 18 years old, we had one boy just now passed out. His father told that, I'm so proud of my son. He's earning more than what I'm earning. Now, we are very fascinated and habituated to seeing MBAs earn 40 lakhs, 50 lakhs and get, but how much time, money and energy has he put? And everybody is not. See, there are 8 types of intelligence. Only bookish intelligence, not that. There is financial, there is mathematical intelligence. But there's social skill intelligence. There are people who can get the work done very easily. There are people who are very good with plants. There are very good people who are good with setting the stage, artwork. So we are attracting that talent and making them go ahead. And that's been very fulfilling. And that has been one of the success of Kamats.
No, I'll talk about the cars, the academy, later on, and how it feeds into your business, maybe lowering cost or better professionals you're getting directly from the academy. Like this, sticking to the restaurant business for now, JV means 50% is yours.
Yes.
The
51 will be ours. Yeah. Including financial investment.
51 will be yours.
Yes.
Let's say you need like a 1 crore. So 51 lakh you will bring.
Yes, we will put.
And another 49 lakh would be bought in by the other partner.
That's correct.
Okay, so then let's say you get like a 1 crore revenue in the first year. How will it be split? Will it be split on profits,
right?
The
profits will be split as per the investment.
Okay, then what is this partner contributing? Just the capex or anything else?
He's contributing capex. He's contributing local connections. He's contributing space. Space means he may not own space, but knowing in a particular city. See, knowledge also is important. you know in a city, sir, ये जगह सही है, because in restaurants, location. You need a good location in the city. Within the city, you need the right location, and within that area also you need the right location.
Right.
So that is very specific knowledge. I mean, you could be, being on the wrong corner or being just off the street. It can be a huge difference. So that intricate knowledge is what the partner will give. Also, local connections in terms of when you want to promote the restaurant. If you can reach out to important people within the city, that also is business generating. So that's where the local partner comes in, not just capital. And we are looking at partners who can commit to opening at least 5 restaurants.
Got it.
Otherwise, we're not interested. We don't want to get back into individual, do one restaurant with one guy. We want people who can partner with us at least for 5 locations within that city or within 100, 150 kilometers of that city. I mean, let's take an example of Indore. Indore itself may take 1 or 2 outlets, but you can do Ujjain, you can do so many other places around it. So, that kind of a thing.
Absolutely. So, this JV partner, especially outside Bombay, okay, let's say we open 5 new restaurants. Once opened, how many years does it take for break even? Or let me ask you another question. Like, what is the expected revenue from each restaurant?
See, more than expected revenue, normally we take it that it will take about 3 years for the payback period for the restaurant. Between 2.5 to 3 years. And this is very realistic. I know there are many people who say, 18 महीने में return आता है restaurant business में, ये business, I mean, if somebody is getting 18 months return in the business, I mean, I'll go and work for them, because then, but you have to be realistic. I mean, 33% return is a great return, and that's realistic. Okay, more than that, if you're saying 18 months means what is it? It's 50. Are you really in the restaurant business? I mean, I want to hint what they might be selling, because nothing is going to give you 75% kind of return.
3 years is base period. 3 years bare minimum it takes for any fixed asset to give you its.
3 years is realistic, and I always temper everybody's expectation that must be realistic.
So this is great. Like, in terms of, this is what I wanted to get from you, because you do not do conference calls. You're a small company, right? At the moment.
See,
my point is, like, I just wanted to get your expectation. If all goes well, of course, there's a disclaimer to this. If all goes well, where do you see yourself? Now, I want to talk about a couple of challenges. Okay. First would be, look, from 2005. How did it take you so long? I do not know the hotel. I will be very honest. I do not know hotel industry in very detail. But from 2005 to today, meaning it's not bloomed too high. So what is the case between the last 20 years?
I have whatever I've done, I have put all the capital on my own. This is practically a bootstrap company. Till today, promoters are owning 65% of this business till today.
Okay.
When we listed also, I was the youngest. I listed this company when I was 30. I was the youngest ever owner of a hotel business. Okay, definitely in India. Until today, I'm the first and only who's having such a large hotel business at this age. So there are many firsts that I have done, and I had to put everything together on my own. And it's only in last 2-3 years that you are seeing the hotel industry be the flavor of the season, because of certain other stocks, large stocks doing very well, many behemoths having given multiple returns. If you see, when I joined the industry since 2003, between 2003 2007, it was a golden time for India, because at that time everything was booming. Civil engineers booming. Money was awash in the market. Hotels were doing exceedingly well. Bangalore and Pune, they were charging rates unheard of. Okay, I remember at one point the Boeing CEO at that time had complained that this is ridiculous. I'm paying 1 lakh a room a night for Bangalore, and this and all. Everybody was complaining, but the euphoria of the markets, that happened. And then after 2007, when the crash happened, since that time, hotel industry has always had a very bad name. I mean, there are big players who so many hotels have gone under in the last, hotel chains and very big reputed names have gotten taken over by ARCs. So one ARC took it over, sold it to a financial company. That financial company is planning to relist that company, which was in the dumps, and that too at one of the largest hotel IPOs. So this flavor of the season has come now. In this phase, there was nobody looking to invest in hospitality. So despite it all, I mean, yeah, it's good that I stuck it out.
Rather being consistent than go with intensity and then lose it all.
Yeah, so I've been building it up. I've been
Yeah.
consistent, and I have invested where it's important. It
Mm-hmm.
took its time, and in between, so many other shocks have come. We've had Lehman, we've had the meltdown, we had the crisis of 2014, we've had then demonetization, GST not so much, but demonetization, and COVID. COVID itself has taken at least 3 years of entire everybody's time and energy, everybody's lifetime. 3 years have gone, 1,000 days have gone.
Yeah.
And it's a blur. I don't think anybody even remembers what was COVID. So
You mentioned that until 2007 it was a boom period. Then it was been slow until let's say 2021.
yeah,
If you see, there was capacity keep on building, and then even at that point 2007, even after slightly after 2007, like 2011, there was more demand than supply. Then eventually they kept building, and in 2014 2015, what happened was there was hotels were operating at like 60%
Yeah.
room occupancy,
Yes.
which is like a 60% utilization. Now, at this point, because this boom is taking place, maybe it's in the early stage, maybe it's in the late stage, it's meaning you only realize in hindsight. So, is this where we are currently, overcapacity problem, or is the demand yet to come in?
no, in the immediate terms, they're not over. There might be certain markets. See, uh, certain markets always have some kind of euphoria attached.
Yeah.
So they might have some. We are seeing some of that happen in some temple towns where everybody rushed in, and eventually water seeks its own level. We are also trying to identify, hidden gems like a green portfolio that the see what nobody else is seeing, and that comes through insight, that comes through effort, and that comes through time and energy that you have to invest yourself. You cannot outsource it. You have to do the hard work yourself. So we keep doing that. We keep evaluating many areas. I mean, we have been in areas where nobody was thinking of. Silvassa, nobody thought of. Dwarka, nobody thought of. We had a hotel in Latur for a good 10 years, nobody thought of. We have at Divyagar, nobody thought of. Ratnagiri. Many of these markets, they don't even have a branded hotel.
True.
And we are the only one.
True.
So, and being a F&B based company, coming with F&B background, for us, we don't think, oh, is this a big city, small city? We are like this only. I mean, you were saying that this is one of your first things. I learned from Rajiv Bajaj. I all the time wearing this shirt and promoting my brand, and this is how we are. Because you have to be practical in the end. We are not saying, oh, is this a tier 1 city? Then only we'll go. We are not in suits and tie all the time, or that we think, oh, we can't enter this city. No, we go where the market is. We go where there's business.
Then I want to look from what you've said for so long. I have identified a couple of pillars. One is you are going at managed and leased, so your capex is low.
Yes.
Second is that more practicality, meaning you're not chasing the trend. People are going to Jamnagar, Ayodhya, all these places. That doesn't mean you go and build hotels late, because in Ayodhya itself there are 55 hotels currently being built.
I'm sure. And what about what's already been built?
Yeah.
In these last 3 years, what about what's already been built and what more is going to come?
And then another pillar is, you can explain this. If I look at your financials, especially the hotel business, like a consolidated minus the standalone. Standalone is the restaurant business.
Yes.
Your margins are lower than the peer players. At the same time, as a caveat, your return on equity. Return on equity is the assets that you have in the hotel business minus the liabilities that you have in the hotel business. Then the profit that you make on that, on top of that, is higher. Like in FY23, I do not have the financial year 24 data. FY23, you were doing it like 19%, which is much higher than what the competitors, the large players, are doing in the industry. That is like, firstly, low profit margin, high ROE, coupled with your average revenue per room is like 2,950 rupees, which is significantly and dramatically lower than what other players are doing. Other players are ranging between 10,000 and 8,000. It's surprising if you get a room here in Bombay for 7,000 or 8,000 rupees. It's much more than that. So I'm just saying the average revenue per room is low. So I think this strategy is completely unique. What do you have to say about this? Do you plan to go ahead with the same?
One is most of our hotels are in tier 2, tier 3 cities, where, like I told you, in some of these markets, we are the only branded player. So you have the market is In Ratnagiri, you can't charge beyond 3,000, 3,500. If he wants to pay more, he's not going to stay in Ratnagiri. Okay, he'll stay in another city only and then come up and down. Okay, let's say he's coming there for a visit or factory visit. Most of these resorts also we are doing like Divyagar, Murud, Dapoli and many other resorts. We are doing ARR of 4,500 to 5,000. We are very proud to be a mid-market player. We are not only keeping our hotels. As I said, I'm not in the 5-star space.
Yeah.
We are not in those 5-star destinations also in many cases.
Yeah.
We are in destinations where the common people are going. Okay. If it is beyond somebody's reach and they cannot spend 10,000, they are still going on holiday somewhere. They are going where it's not 10,000 rupees a night.
Absolutely.
Okay. In Goa also people are going. Not everybody is staying in XYZ and paying 10,000, 12,000 rupees. There is a market. Why Airbnb grew? Because there's a parallel market of people who also want to holiday. And we are very proud to be in that market. And to answer your question, firstly, our cost structure is different. Our cost structure is accepting this reality that this is our market. So we have to keep our cost structure low. When we make investment, because we don't think like, oh, let's do this because the return on equity will be great. We do it because over time we have realized कि अपने को पैसा बचाना है और पैसे का सही utilization करना है. Now whether the return on equity is 19%, 25% or 14%, we have not calculated when we made the investment. We have gone with the simple logic that we have to utilize our money intelligently. और वही लगाना है जहाँ पर practical बने. If something can be done in 2,000 rupees, why would I want to spend 5,000 rupees? So that's how we think. This is our DNA is only like that. So we have not made anything seeing our balance sheet या इसको ऐसे करेंगे. It just came out like that and उसका result आपको दिख रहा है. Because I have till today not seen it this way the way you are seeing it. So it's just the outcome of how we think.
Look, because I touched on financials in 2020 during the COVID, in that financial year, you reported profits. It is quite surprising, especially we expect the aviation, hospitality, tourism sector to be the hardest hit and easiest to recover. But you reported profits. How was that?
Yeah, it was not mind-boggling profit. It was a very small profit, but it is coming again from the fact that we as I told you in our company, we call it 7B. First is to be practical. So we cut everything to the bone. We reduced our expenses left, right, and center. We have always been lean. We have always been a fit company, and we gave up the office, stopped this, stopped that, whatever was required to survive. Because, like I told you, since we don't have any funding, major external funding in terms of like some, big PE has invested in us hundreds or thousands of crores or this thing or whatever. So I knew that boss, अपने को खुद को ही बचाना है. Okay, and of course, when we did it also, we didn't do it कि let's post a profit. We just did whatever we had to. We said, we don't know ये कितना दिन चलने वाला है. First month we were all very happy. We spent more time with our families than probably we have in all the years combined as hotel restaurant people. Because normally we end up spending more time with the guests or in the hotel or in the restaurant. So it was good in the first month, but then we started getting scared because as a hotel or restaurant company, your major cost is your salaries. And in an operating company like we are, our major cost is again salary because the operating assets are with us.
Yeah.
So we started getting worried. That's when we realized, boss, we need to cut our kharcha like there's no tomorrow. Anything we think we are not seeing the clarity that we need this tomorrow, kharcha kam karo. So that's how it happened. And I'm glad that our track record of 7 years of continuous profit is intact.
I'm sure the fact that you had more managed hotels.
Yeah,
that helped.
We didn't have any leased. We had just one leased hotel at that time. We are all managed hotels. So like I said, even that time also we didn't have any significant debt. So it didn't matter. I mean, our head was comfortably above the water.
Okay. Now, when I look at your balance sheet in financial year 24, there's a huge jump in PPE. Like around 4 crores, it has come to around 9.5 crores.
Yeah.
So like fixed capital.
Yes.
You are saying that you're either going for leased or managed. Like in 20 hotels, you have only 4 leased. Rest are managed. So where is this capex coming from?
No, one is a function of, and I'm sure the accountants can explain better, but one is a function of some Ind AS. You have to show the leases as some kind of asset and things like that. And the second is obviously in each of these leases you have to spend some amount of money. On average in a lease, we have kept as a benchmark. Per room we have a benchmark that more than this we don't want. So those are expense which you have to make. On average, it comes to about 20-25 lakhs per hotel.
Okay.
So on 3 leases, 60 lakhs, 70 lakhs, तो ऐसे ही minimum तो होता ही है. So there are other things.
Okay. No, so the one you mentioned earlier, right? If you're leasing, it comes out right of use of assets below the PP. Understood. Okay, but that's the PP is different. But I'm sure what you said that you have to spend
You have to
certain
spend.
amount of money when you take a
We
hotel.
took out the hall earlier. There are other things, signages, some basic. Sometimes somebody's lift is not in the best condition,
Yeah.
so you want it. So then you have to do it at your cost.
Understood. Understood. Great. And on the debt side, you have around 20 crore. If you
Yeah,
can explain, like where is this debt being utilized? Do you plan to repay? Do you plan to issue equity and reduce the debt? What is your gameplay?
I think we are planning to reduce the debt.
Okay.
We have some strategies in mind. We have some assets which are there with us, which are not being fully utilized, which we'll take care, which are lying in the company in Vidli Restaurants Limited. So we'll rework that.
Great. Lastly, like towards the end, I just want to cover this as well. You said you have a school which is into hotel management. So how does that
It's a skill
work?
academy.
Skill academy.
The
Yes.
skill academy. It's got 2 phases to it. One is after 10th you can complete your 12th equivalence from here. It's in co-association with Maharashtra State Vocational Board, where we've come out with our own programs, where in those 2 years earn and learn, where you get a stipend of 7,000 rupees per month. We started with 4 courses. Now we plan to do revenue management. We plan to do sales courses, all practical oriented courses which are skill based.
Okay.
And then after you complete your 12th, you can also complete your graduation through Bachelor in Vocational Studies in Hospitality from Mumbai University. So we have done end to end for these people. Of course, they don't need to work only with Kamats or with WITS. They can work in the market also. It's just easier for us to complete their placement. We've had a 100% placement track record. And our whole focus is to make people job ready.
Okay.
Many people have told me, why don't you charge lakhs or start a hotel management school? We are not. Today, there are more than 70 lakh vacancies in hospitality. People are saying that हमको आदमी नहीं मिल रहा है. And consequently, people are saying jobs नहीं है. Meaning job नहीं मिल रहे, meaning the joblessness. Problem is people are not matched for the skill.
Understood.
And people are not having that skill which the market wants. So our entire focus is on getting people job ready, to get them jobs. So all our courses are job oriented courses. These are important skills that you can learn, which will get you placement primarily within hospitality, but most of these skills can get you job anywhere. I mean, if you're like in our food production course, what do we teach them? We teach them basic biryani, khichdi, one curry, upma, poha, shira, tea, coffee. These are the items which if you learn, you'll get a job anywhere. Now, after that, how much you go ahead is...
If you're paying someone 7,000 rupees stipend, then how are you making money?
No, this is not a money-making exercise.
Okay.
This exercise is not at all monetary making. This is to get people jobs in the industry, create talent for the industry. Eventually, since we are the largest, घूम फिर के हमारे पास ही आएंगे. But this is the larger exercise of creating talent for the industry. It has got, I mean, everything is not money.
Then this won't be part of the listed business, right?
It is part of the listed business.
Okay.
It is not some CSR initiative. It is part of the listed business. It has a proper head, it has a proper team who focuses on it. But is it a value maximization, where we can charge lakhs, other hotel management schools are charging lakhs? No. We want these people to be practical and within the industry. If they have spent 3 lakh, 5 lakh, why will they do entry level jobs? Why will you are teaching them a skill which they can build their career with? So it is not about that's why I'm very clear. It's academy.
Yeah.
It's a skill academy. It's not a university. It's not this thing. No.
Okay. So this is part of the listed business, but non-monetized. Meaning there's no charging students. There's no.
No, we charge students as well. There is a fee for it. There is an upfront fee, because anything given free, India too, of course, but I think world over, anything given free, nobody has value, because we started like that. Then people dandi marte, मतलब कोई आ नहीं रहा है. Here the parents also keep little pressure on you, because in the end these are 16-year-olds, 10th standard equivalent, they are 16-year-old kids. So they have to see the career, they have to learn how to work with people, they learn how to work with people, they learn how to get work done and how to do work themselves. So many parents tell, my daughter or son has become more responsible, their grooming has become better, they know dunya, I mean, they know how to live in the world, So that's a huge thing. We provide them food and accommodation also at many of the hotels. So many of the students have gone far beyond, like I give you the example of some of the students. So we are seeing this as a larger exercise. We are seeing this for our satisfaction of
Okay.
doing good work.
So look, my point is, as shareholders,
Yeah.
let's say, there is a look. Shareholders, we are investing for profit, all
Yeah.
said and done, right? In the listed company, you have a this thing Mahe, right? That is into CAS, sorry, CAS,
Khas, yes.
CAS,
Kamat
the
of the
academy,
Khas, yes.
which is a non-profit entity.
It's not, no, we are still making money. I mean, I don't like to lose money, by the
Okay.
way. I'm,
That's what I was
no,
getting
no,
to.
no. I don't like to lose money. It doesn't mean you have to make money hand over fist.
No.
I'm not saying we are spending anything. We are
Yeah.
not losing any money in that.
Okay.
Okay. It is a profitable part of the business. But is it highly profitable? Is profit maximization the goal of that? No.
No. Get
It
that.
is to create the talent for the industry, which will eventually come to me. It's a little larger goal.
Okay.
And everything is not immediate return. This same person, if Kamats has made his career, tomorrow he, after 10 years, is head somewhere. He is going to encourage other kids ki, boss, dekho, mera life Kamats se ban gaya, tum bhi join karo khas. And that will create talent for the industry. Like I said, eventually, if I am good enough, they'll stay with me.
Absolutely.
But we have to do our work, and the rest will take care of itself.
Great, awesome. And did you have any synergy that people who have graduated from here, who are upskilled from this academy, come into your hotel business, restaurant business?
Right now, many of them are.
Okay.
Most of them are. They have got offers from other places also, but most of them have because they like the work environment. See, if I see the other way. If somebody has been with me 2 years and I'm not retaining him, then the problem with me. Okay, in 2 years, I have not made him mine own, and he wants to go somewhere else. That the issue is with me. So in this case, too, they all have stayed. Not all. Some have chosen to go on, but yeah, a large majority have, and we are very proud of that.
Awesome. Okay, so this was a great interaction.
Thank you.
Especially understanding your business, your vision, and the challenges that the industry is facing. And
Thank you for having me, Sriram, and it's a pleasure that I was selected by you, being one of the smaller companies. But I'm sure in time, every large acorn tree starts with a seed. So
Absolutely.
I'm sure it's the same here. Thank you.
Awesome.
Thank you.
Thank you.
Thank you. Thank you.